What's up, baby? Let's go! Welcome back to Moo Trades. Today's video is going to go over the essential two-legged pullback and how to properly identify that given the right market context, signal bars, trend channels, all of that. And that's all the intro I got for you guys. Let's just hop into the charts and I'll show you guys what I'm talking about. Okay. And the first setup that we're going to look at is in this uptrend. So what do we always do in the uptrends? We just draw our trend channels. So in the overnight session, there was a strong uptrend here, followed by a lot of congestion. But we know that with trend lines and trend channels, once there's a break, we'd still expect a new high or new test at this extreme before considering the uptrend to be over. So we had the break, we had a lot of choppiness, and we finally reached the new high. So that tells us that we could potentially start reversing. But once we see this other push up, what that really signals to me is that, okay, this actually might be a wider uptrend, and we just had to have a little bit of congestion before marching on forward again. So this is telling me, okay, there's a lot of bulls still in the market, and let's look for second entry longs or two-legged pullbacks at the EMA with a nice signal bar. So we had one pullback right there. We're counting from this new high. That's our first pullback. Then we had another push up, followed by another mini pullback because this bar all the way on the right side broke below the one previous to it. So the first arrow is the first pullback, and then this mini pullback just between these two bars formed another opportunity for a second entry long. So this is considered a first entry right there because this bar broke above the one previous to it, so that's a first entry long. We came back and tested the EMA, and if the next bar breaks above this one, that would create a second entry long, and it would have worked out for a great trade. This is known as the two-legged pullback because there were two legs down. Here's the first leg down, and like I said, we had the mini second leg down before pushing on forward again. And in uptrends with a nice signal bar above the EMA, this is a very high probability trade, and it's what I look for every single day. Let's look for the second setup. All right, and in this second setup, we're actually going to show you guys how the second entry long is a very high probability setup, but like we said, it's only high probability given there's a nice signal bar, a good market context. So in the previous example, we saw that we were still in that wider uptrend, and we were expecting just to have more bullish momentum continued. But in this example, I'm going to show you guys how this is different. So we had a lot of choppiness here. We had a mini range, and this is still in the overnight session, but we always draw our trend channels. So we had a strong push up, correct? We don't want to always adjust our trend lines once we see this break and a new high, because some people would immediately see that and start adjusting their trend line to fit perfectly like that. But notice the subtle differences. If you do this, then you only have one touch at the bottom and another touch here. But what I had before was much more accurate because it fit all these bars very nicely. We only want to widen the channel once we have a break and a new high, followed by another test at the EMA and another leg up. That will signal that the wider trend channel might be valid. However, once we have this break and a new high, then all we're thinking is, okay, we can start looking for potential reversals. Now we were going down. We had our first pullback and our first entry long, followed by a second leg down, followed by a nice green bullish bar. So our first leg down, our second leg down, Our first entry long occurred right there because that green bar broke above the red one. And if the next bar breaks above this one, that'll create a second entry long after those two pullbacks. But in this case, it was a failure. This is for a couple reasons. First of all, we had the break and a new high, so we should already be thinking, okay, there's a potential reversal incoming and the uptrend could be over. Also, when we're taking these second entry longs, we always have to consider the signal bar to be the lowest low of the swing. So in this swing, in this second leg down, the signal bar in this case would actually be this bar, which is very, very bearish. You can't just see the next bar that it's green and bullish above the EMA and consider, okay, that's a good signal bar, because in reality, that's not even the signal bar at all. The signal bar is always the lowest low in the swing in an uptrend. So that's why we would never even take this trade to begin with. But if you had, you would have got burned, and that's why these techniques are very powerful, but only if you apply them in the correct context. Let's go to the third setup now. Okay, and in the third setup we're going to look at, we're going to see that there's a very, very textbook setup once again, and a strong uptrend, two-legged pullback off the EMA, great signal bar, and you just got to learn how to take these every time that they're given to you. So we can draw our trend line. We can really focus on this thinner trend line, even though that there was a wider uptrend in play. We can also draw that if we like. But we can kind of see that the most recent trend kind of took precedence. So we can draw something like that as well. But in the end of the day, we always want to prioritize the thinner, more recent trend channels over the wider term ones, because the wider term ones just allow for the context to really present itself on the charts in terms of the illustration. But the shorter term trend lines and trend channels really allow for that nice and neat consolidation of the price action. So we're counting from this new high, and we're looking for a two-legged pullback once again. We have one pullback because the bars were breaking below. We had our first entry long right there because the second doji actually was one tick above the first doji. So we went from 3790.5 to 3790.75. So that was one tick for a first entry long. Then we went down once again, creating the second pullback. And in real time, once we see this happening, once we see this first pullback, followed by a first entry long, followed by a second pullback, and a nice bullish bar at the EMA, at the trend line, you just have to go for this second entry long, and it would have been a nice trade. That's pretty much it, and I got two more setups to show you guys, so let's just dive in. And in this fourth setup that I got for you guys is going to be very, very similar, but completely different from the second setup that we went over. If you guys want to go over that one once again after I show you guys this one. But remember, in the trend channels that we draw, once that there's a break and a new high, we consider it to be over, which is what we saw in the second setup. But in this one, we see that this strong trend is still intact. We have our first break of it, our first pullback, followed by a first entry long, because that bar on the right side broke above the one with the green arrow. So that's our first entry long, followed by a second pullback, nice bullish bar. If the next bar breaks above this one, that will create the second entry long, and it would have worked out for a scalp. It would have went from 3699.75, where you would have entered, all the way up to, it would have been good for about a 2-point scalp. Now, remember the rules for the trend channels. Once there's a break, we still are expecting a new high. So that gave us more of a reason to consider the trend to still be in play. So the bulls were still willing to buy. However, in the second setup we looked at, we had already seen a break in a new high of the trend channel, signaling that even if there was a two-legged pullback, second entry long, we should skip it and wait for a better setup. And yeah, this one was pretty textbook. Let's go on to the last setup now. Okay, for setup number 5, we're actually going to look for a two-legged pullback, but in a downtrend. So the same rules apply. We're going down. Let's draw our trend channel. Something that looks like this, because we had a break. Let's explain this for a sec. Okay, once we have our first thin trend line, and we have a break and a new low, we see that, okay, in trend line rules, because there's a break and a new low, we're expecting the downtrend to be over. But once we have such a strong leg once again, we can really just tell ourselves, okay, we're looking for another break and a new low because another downtrend formed, which really means that on the shorter time scales, people are still selling. So a wider trend is most likely in play, and we could still look for the two-legged pullbacks with confidence. And we see that, okay, we kept going a little further down. We're counting from this low. We have our first pullback, followed by our first entry short right there, and a second pullback, followed by a second entry short. Now, once again, we don't want to take this second entry short because in reality, we would use that bar as the signal bar because it's the highest high in the swing. But this is just to show you guys how the same things apply in the downtrend. But let's see if we resume the downtrend and see another second entry short. And we have a break and a new low, followed by another test at the EMA. And in this case, we can start to widen the trend line just because in the context of the day, we had a range and we went from these highs and we're still expecting to reach these lows because we went from the highs down to the lows, down to the highs again. And even though we had a break and a new low of the downtrend we had originally, something like that, because we tested the EMA once again, and there's so much selling pressure at this level, we can be confident that we're still attempting to go all the way to the bottom of this range. And because we had a first pullback, second pullback, first entry short, second entry short if the next bar breaks below that one, with a great bearish bar with about 80% of it below the EMA, we can still be confident that this trade will work out. And like I said, we actually ended up still making it to these lows, and we actually went further and further. So that's why these two-legged pullbacks, when you're reading the market context in the right way, they can lead to great runners as well. You could have got a huge chunk of this move if you had a runner in place. And yeah, guys, that's going to wrap up the video. Peace out. Like, subscribe, do your thing. Leave me some comments, questions, whatever you guys need. Have a good day.